Welcome to today's market report. The Pan-European Stock 600 index rose 0.7% and MSCI's All-Country World Index was up 0.72%, recovering some of Friday's losses after touching its lowest since May 24th earlier in the session. Germany stocks were mixed after the close on Monday, as gains in the chemicals, transportations and logistics and telecoms sectors led shares higher, while losses in pharmaceuticals and healthcare, software and construction sectors led shares lower. The DAX rose 1% at the close, while the MDAX index gained 0.52% and the Tech DAX index lost 0.09%. France stocks were higher after the close on Monday, as gains in the food and drugs, gas and water and general financial sectors led shares higher. The CAC 40 gained 0.51%, while the SBF 120 index gained 0.43%. Wall Street rebounded on Monday and global shares rose from a 4-week low as investors banked on economic growth, while the US dollar retreated from Friday's 10-week high and the yield curve flattened. Yields on 10-year treasuries turned higher after sliding to a 4-month low of 1.35%, but the benchmark note was still trading well below its recent midpoint range of about 1.6% after traders reacted to Federal Reserve expectations for a rate hike. Shares of banks and energy firms and other companies that tend to be sensitive to the economy's fluctuations recovered after have fallen sharply since Fed's meeting on Wednesday, when the central bank caught investors off guard by anticipating 2/4 percent point rate increases in 2023. The Dow Jones Industrial Average and the S&P 500 recovered much of the losses seen at the tail end of last week, as investors repositioned portfolios after last week's surprise hawkish shift by the Federal Reserve, the Dow Jones adding 1.75% and the S&P gained 1.38%. The Nasdaq rose 0.81%. According to JP Morgan, inflation is not running out of control, and in fact, we think economic growth will come in better than expected. If so, this suggests that equity multiples could be lower than people think, and therefore we shouldn't be scared about even adding to equities at these levels, both in the United States and overseas. Crude oil rose, underpinned by demand. Brent crude futures were at $74.77 per barrel, up 1.71% on the day. US crude rose 2.5% to $73.43 per barrel. Gold futures added 1.1% to $1,783.29 per ounce, locking up to snap a 6-day losing streak, but remain near the lowest since early May. On the FX front, GBP/USD is trading at 139.30 and up nearly 1%, having climbed from a low of 137.86 to a high of 139.34. The pound has recovered from its lowest level versus the dollar since April, as the greenback corrects after the US Federal Reserve surprised the market with a hawkish hold last Wednesday. The Fed has brought forward the prospects of the timing of an interest rate hike and emergency bond buying. This has put the focus on the Bank of England that announces its latest decision at 1 p.m. on Thursday, 24th of June. There will be no new forecasts this time and policy changes are unlikely. However, a more optimistic economic assessment from the Bank of England could push sterling over the line of 140. UK inflation is hot topic. UK inflation hit its highest in nearly 2 years. Investors brought forward bets that Bank of England would raise interest rates sooner than they thought previously, flattening the yield curve for British government bonds and mirroring a recent move in US Treasuries. Euro-dollar extends further the rebound from multi-week lows in the mid-118s recorded earlier on Monday, always sponsored by the corrective downside in the book and sustained by the broad-based improvement in the risk-associated Galaxy. Also collaborating with the upside in the spot, yields of the key German 10-year reference managed to gather extra steam and reach multi-day peaks in the minus 0.17% zone. Dollar retreated from 2-month highs on Monday, fell 0.44% to 91.849.
This is today's market news. Thanks for listening. We'll see you next time.